Hey everyone, welcome back to Corporate Decoder, the place where we sift through the corporate jargon so you don't have to. Today we're diving into a proxy statement from FS Credit Opportunities Corp, and trust me, it's not as boring as it sounds. This document reveals who's calling the shots, how much they're getting paid, and whether they're playing by the rules. Get ready for some interesting insights and possibly some head-scratching moments. Basically, this filing tells us who they want you to elect to the board, how much the board members make, and if everyone is behaving ethically. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can share your takes and find out about similar companies. First things first, this document is a Schedule 14A, a proxy statement. Think of it as a formal invitation and instruction manual for the company's annual meeting of stockholders, taking place in July of 2025. It tells you what's on the agenda and who the company wants you to vote for. The main event is electing 3 Class 3 directors, Keith Bethel, Della Clark, and Michael C. Foreman. These directors will serve a 3-year term expiring in 2028 if they're elected. The board is encouraging you to vote for all of them. It is basically the management's recommendations to the shareholders of who they think should be on the board. The company is really pushing for you to vote. They even mention they want to avoid delays and save money on getting people to vote. They want to make sure they have enough votes to do business at this meeting. Your vote matters, apparently. This letter and proxy statement were sent to stockholders around May 19, 2025, so you have time to decide. The official record date, meaning the date they looked at who owned shares, was May 15, 2025. If you own shares on that day, you get to vote. You can find the proxy statement and the proxy card, which you need to vote, at proxyvote.com. If you plan to show up in person, you will need ID to get in. To have a meeting, they need a quorum, which means 1/3 of the shares have to be represented either in person or by proxy. Abstaining or choosing not to vote counts as being present for quorum purposes, but it doesn't actually count towards the vote itself. As of May 15, 2025, there are about 198 million common shares and 400,000 preferred shares outstanding. Each share gets 1 vote. Each of the nominees needs to be elected by a plurality, meaning the person with the most votes wins. If your broker doesn't get instructions from you, they may vote your shares for the routine matter of electing directors. If you get multiple copies of these documents and don't want them, you can call their transfer agent to stop the extra mail. You can vote by mail, phone, or internet. Just make sure it's in by 11 a.m. Eastern Time on July 10, 2025. The company is paying for all of this, including the cost of Broadridge Investor Communication Solutions, to help get people to vote for the dollars, not including expenses. Now let's talk about who owns the company. This section tells you how many shares the bigwigs, like the directors and executive officers, own. This helps to understand where the board sits and if their interests are actually aligned with shareholders like you. As of May 1, 2025, Michael Foreman, the chairman and CEO, owns over 400,000 shares. Keith Bethel owns 20,000 and the other independent directors own smaller amounts. All the directors and executive officers together own about 529,000 shares. This could mean that management's interests are not aligned with shareholders. Here's a look at the dollar range of company stock owned by each director. This gives a sense of how much skin in the game each person has. Michael Foreman, Keith Bethel, Walter Buckley, and Barbara Fuss all own over 10 $10. These can show you how invested they are in the company's success. Now we get to the main event, the election of directors. The board is divided into 3 classes, and Class 3 directors are up for election this year. Each director will serve for 3 years. The company points out that most of the board members are independent directors, meaning they don't have a business relationship with the company. They are Keith Bethel, Walter Buckley, Della Clark, Barbara Fuss, Philip Hughes, and Robert Nix. Let's meet the nominees. Keith Bethel has an extensive background in executive management. Della Clark is the president of the Enterprise Center, and Michael Foreman is the current chairman, president, and CEO. Foreman also serves as chairman, president, and/or CEO of other funds sponsored by FS Investments. This is important to note because of potential conflicts of interest down the line. Here's some background on the other directors who aren't up for election this year. They have experience in various industries including banking, finance, and real estate. The board is responsible for overseeing the company's risks. They get reports, review policies, meet with the portfolio management team, and oversee the valuation process. The Chief Compliance Officer reports quarterly to the board. on compliance with securities laws and internal policies. The board also gets reports from legal counsel. Michael Foreman serves as both CEO and chairman of the board, which concentrates a lot of power in one person. There is a lead independent director, Walter Buckley, who helps balance things out. The board has an audit committee and a nominating and corporate governance committee made up entirely of independent directors. The audit committee oversees the company's accounting, financial reporting, and internal controls. The nominating and corporate governance committee handles director nominations and corporate governance matters. They look at experience, skills, diversity, and integrity. If you want to contact the board, you can send a letter to their address. Here are the executive officers who aren't on the board. They include the chief financial officer, the vice president, and the chief compliance officer. The company has a code of ethics that applies to everyone, including the CEO and CFO. The company has a policy against insider trading and also limits the ability of executives and board members to bet against the stock. The company's executives don't get paid directly by the company. They're employees of the advisor, which manages the company. The directors who aren't also executives get annual fees, meeting fees, and fees for being on committees. Here are the fees they make. The annual board retainer is $100,000. Lead independent director gets an extra $25,000. And committee chairs get between $115,000 and $20,000. And $20,000. And 20 chairs get between, I think, $50,000. Board $1,000 and committee chairs get between $115,000 and $20,000. They also get reimbursed for expenses. In 2024, the independent directors earned between $111,000 and $135,000. Michael Foreman did not get compensated. Not all directors get the same compensation. This section talks about late filings. One director, Robert Nix, failed to file a required form on time. Everyone else seems to have filed their paperwork correctly. The advisor gets paid a management fee and an incentive fee. The management fee is 1.35% of the company's average daily gross assets. The incentive fee is based on the company's performance, subject to a preferred return rate of 6% per year. In 2024, the company paid the advisor about $29 million in management fees, $19 million in incentive fees, and $4 million for administrative services. Because the same people manage other funds, there could be conflicts of interest in choosing which investments to make. The company got permission from the SEC to co-invest with other funds managed by the advisor. This is a complex area, so they want to make it easier to co-invest. The company's affiliate manages some CLOs, or collateralized loan obligations. The company gets reimbursed for some of the fees the affiliate earns to account for conflicts of interest. Ernst & Young is the company's accounting firm. Here's how much the company paid Ernst & Young. $365,655 to audit fees, $40,000 for audit-related fees, and $14,175 for tax fees. The audit committee has to approve all the services provided by Ernst & Young. The audit committee says they reviewed the financial statements and recommended that they be included in the company's annual report. The board wants you to vote for each of the director nominees. If you want to submit a proposal for the 2026 meeting, you have to do it by January 16, 2026. The board doesn't know of any other matters to be voted on. The investment advisor and administrator is FS Global Advisor LLC. The co-administrator is State Street Bank and Trust Company. Finally, here's a list of the people who own more than 5% of the company's preferred shares. Now looking at these factors, I think the board has some good experience and seem generally independent. However, it's important to note that management and the board are not heavily invested in the company compared to retail investors who might put a large chunk of their wealth inside the company's shares. This might be a reason for concern for investors and something to look out for in the future. Alright, that's our breakdown of FS Credit Opportunities Corp's proxy statement. What's your take on these directors and their compensation? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.